Happy Monday, everyone. Welcome to Topstep TV. This is the Metal Markets. I'm your host, Market Stalker D. I've been trading metals and energies for close to 20 years now, and I joined the Topstep family back in 2015 when I became their first female funded trader. My approach, if you're new here, is heavily data-driven. I lean on order flow concepts such as market profile, tape reading, supply and demand dynamics, options gamma levels, and statistical averages to build what I call situational awareness, basically a fancy name for saying finding high probability inflection levels where the dealers are expected to adjust their positioning, which in turn creates the ebb and flow of intraday price action. So every session on this show, I'm going to be breaking down what the data is telling us in the metals and energy space, identifying some key levels and anchor points, and talking through some of the possible hypotheses around them for the narrative they might be creating today. Now, before we begin, please read the risk disclaimer that Bruno posted in chat so that we're all on the same page. Do not blindly follow trades because this is not a signals class. It is meant to be educational. With that said, let's have a dive into the weekly time frames. So massive time frames just to see where we are and how these markets are looking from a bird's eye view. Let's start with gold first. Gold is now completed. Sorry, that's not gold, that is copper. Good morning, Monday. Right, so gold has completed a test of a single print. Seems to be having some trouble with it. Why am I saying that? Because look at these wicks. We created a good reversal, tried to go higher, but really if they were going to chew up this entire drop candle, I would have wanted to see more like a Maribozu candle without any sort of selling wicks, rather than this huge reversal. And remember, this is a weekly chart, so any kind of wick that is larger, you can try and analyze the composition of the candle and see where you are. Up until now, we've had gold reacting to the downside whenever there's any kind of breakdown in ceasefire. So for some reason, gold and crude oil have been negatively correlated. And with that in mind, ES, so equities and gold, have been positively correlated. Now, on the weekly time frame, that correlation is currently not as pronounced. So you can see this blue little oscillator at the bottom. But this is just a weekly time frame, so that's not really telling us all that much. Looking at crude oil, last week it definitely gave it a good go to reverse to the downside. But just by the fact that we are opening up already inside this future supply, that doesn't bode very well. So I'm going to say that this is probably more a range than any kind of a reversal. Another reason why I'm saying that is because we were unable to even pop the high where we reversed initially about 4 or 5 weeks ago and created that 119 level. There is still a 2-bar reversal here, but like I said, anytime I see that, I would want to see a good reaction already from this market point shift. So if you imagine that these two candles, when the other one started dropping, at some point they looked like it's an equilibrium, so they looked like they were at the same point, and then the down candle just carried on to effectively do a little jump off a cliff. But with the ceasefire not really holding and the conversations breaking down, we could see crude oil crawling back up somewhere to the not the all-time high, because the all-time high is 139, but to this recent high where we had a reversal. So for now, it's sitting dead in the middle of this range, and therefore it's no longer that useful for us. So we need to see how intraday turns out. Looking at copper is reaching a congestion area, and even though it may carry on higher, in the short term I would expect to see some kind of a reaction, and I'll tell you why in a minute. But right now we're in a heavily congested area, so if I put the visible range profile here, you will see there's a lot of big high volume nodes here. That tends to be at least a kind of like breaks for the price action. Even if they carry on through it, the movement through those areas tends to be a little bit more sluggish, and it will add time onto the swing that they might want to achieve. Now, obviously, if we do get a ceasefire, if they are successful in, ending the war, then sure, we could go all the way through this. But for now, it's all looking a little bit sketchy. All right, let's get into the daily time frame on gold and then do the same thing. Daily chart, speaking of a range, right? Here it is. So there's another range that is telling us they're having some trouble, or maybe price agreement. We could call it price agreement. So they're all pretty happy in this area for now until more news comes out. Headline risk remains a problem. This is Monday, so please take it slow. Let's not dig massive holes before lunchtime, because we want to make sure that we have enough bullets for the rest of the week, right? You don't want to make your Mondays into, hey, I've dug a huge hole, and then the rest of the week turns into you just having to dig out of that hole rather than any profit. So this is why I like to take it a bit slower. So I size way down. There's going to be like some kind of accountancy approach to the period that we are trading. So Mondays are not the day to go hard and heavy. Mondays are for feeling out the sentiment through small positions and trying not to get smacked in the face too many times. And if you do, keep those bitch slaps smaller. But yeah, so it's a range. Not much to see here. Let's have a look at crude oil. Opening up with a gap up, obviously because negotiations failed on the first try. Can we go higher? Yes. Where is the nearest daily supply? Somewhere just above 112. And that will be relevant as we get into the intraday levels. But again, for now, this is just one big middle of the middle. And I would like to see some more committed movement, either higher or lower. If they say something positive, I wouldn't be surprised to see this gap filling. But at the moment, that doesn't seem to be the case. All right, let's go to copper daily. And you guys know how much I love copper. Same thing, right? So a lot of congestion in this area. Copper has been positively correlated with gold. So that means if gold starts to go lower, it is going to drag copper with it. At the moment on the daily chart, they're correlated to the tune of 0.7. So pretty decent correlation. And we need to try and maybe capture some of it. Now I do have a short here, so let's get into the intraday on copper before we carry on to the other products, so I can explain what I'm seeing here. Right, so we had the Tokyo high established just at 7 a.m. my time. They tried to go higher, failed. So now we're seeing that liquidity grab and a reversal, potentially through to the other side of the Asia range, even though that's pretty massive. But I would expect to see at least a test of VWAP. VWAP is a pain point for copper. It is very reactive to it. And yeah, so I'm just going to say I'm sorry about my voice. I did have a little bit of a side effect this morning, so I was like really shaky. So therefore my voice is a little bit odd today because of that. But we're going to push through this because, you know, if I can sit up, I do the stream. But yeah, so just apologies for my slightly strangulated squirrel voice. There's nothing I can do about it at the moment, and I keep trying to get it down and relax, but it's just not happening today. All right, so copper is hitting the end of day X2 level. Now, when I looked at it this morning, that level is not actually there as a stronger level, but sometimes these end of day levels can definitely bring a little bit more resistance as the prices are trying to move. However, I like to look at the larger anchor points from the options chain, and the larger one is sitting down at 580. Really nothing much has changed. We still have a gamma wall at 590 all the way up, but the price discovery in Asia told us that they are interested in ballpark 577 because that's where they kind of swiped through and reversed. And then to the upside, for some reason, they're interested in this 588 level. So that's what we have to follow. And let's see whether a couple of micros can give us an indication of which side this product wants to move. But it's a standard Asia high smash, reversal, and then we're going to see how deep they want to take it. Maybe down to 580, but maybe just to VWAP. So if that's the case, I will take it off. As always, I'm not touching my stops. My stop is all the way up above Tokyo High. If that gets taken, it gets taken, whatever, right? So I'm not somebody who overmanages my trades. I make a decision of where the stop should be, and I just commit to the risk. All right, let's look at the intraday levels on crude, because everything is dancing to the crude tune. Crude oil quite clearly opening up above all values. Here's your NYMEX value. Let me just make sure I have that anchored to the correct. Yeah, so all the way down. That's not very relevant for me. What is interesting is that we have a bunch of levels from 103.50 down to 102.50, and 3 of them that are looking all very interesting to me. And that's exactly where they kind of turned it around at 103. So 103 is obviously some kind of a line in the sand. And if they start to kind of throw up to the downside, if we manage to sustain an orderly movement, not a tape bomb, but an orderly movement through 103, I then will default to the gap fill for whatever reason. So for now, that's not the case. They actually bounced it from it, and no sign of them wanting to take it any lower. At the moment, we're fighting VWAP. We're sitting right above it after having reclaimed it. And there is some value maybe in looking at crude getting up to 105.74, maybe even 106. But then at that point, you are in danger of that wick through the Asia high and reversal. That's been happening quite a bit more frequently than I have seen it on crude oil recently, and probably because of this cross correlation across everything. So not that surprising. But my idea is that if we can maybe get up to the Asia high, perhaps there is a fade opportunity that shouldn't last too long, but maybe a fade opportunity back down to the levels where they bounced it. Kind of similar like Asia reversal, but with a bit of a twist, because obviously we have all these levels that we weren't able to break. Now to the downside, I did place the London average session range low, as well as average London session range high, just to see how much this product actually moves in this like sort of pre-market NYMEX phase. And you can see that sitting right around that round number of 170, as well as the average range session high up at 107. And remember, crude oil is super volatile still. Even now, the average candles over the last sort of 9 periods, they're spanning about 66 ticks. So it's less than it was, but as soon as NYMEX kicks in, you tend to see these like big 30-minute candles. So therefore, I'm still going to stay with my idea of larger stops on crude, just in case they want to play games, because that actually worked pretty well for me last week, where I was waiting for a 15-minute reversal into some kind of a failed auction, and then running the failed auction for NYMEX post NY cut, which is after 9 a.m. Central. That's after 3 p.m. London time, if you're over on this side of the world. But failed auctions remain high probability setups in crude oil. I've done them since like 2013 pretty regularly, and they tend to work very well. Now for this time of day, we do typically see some sort of a fade. Maybe it's a little bit too early for that. But I do usually see a decent fade opportunity if they go over the initial balance on one side during the London session. And typically by the time NYMEX comes in, we're back into the initial balance. Now initial balance today is from this candle here. So let's put a little marker. This was IB high. And then IB low. And you can see it was a clean extension, right? So they're trying to reverse it now. But again, I think it's a little bit too early for that. Usually they do it 90 minutes before NYMEX opens. So I'm gonna say that I'm not interested in that at the moment. And what is gold doing? Let's have a look. Am I bullish on gold? Mo is asking. Not at the moment, Mo. Not at the moment. Maybe later. But at the moment we're again in that weird period where they love to establish a range and then just do very little with it. From the profiles, we did open below value and then went into single-sided extension lower. So let's also place the initial balance markers here. So this is IB high. Same thing, same process. And initial balance low. Fairly small initial balance. So that's sometimes a precursor for a larger day, but it can also end up as a neutral day. So we'll see. So right now they're attempting to go back towards the initial balance low. We do have a stronger GEX level at 47.50. If they're not able to close that, I would probably be short instead of long. And where is the Tokyo high here? Let me just find it. So this was 7 o'clock. Yeah, so I mean, I would say that this is looking very similar to copper, right? Only with a much larger range. So wick through the Tokyo high, reversal, not even reaching VWAP at the moment, so they will probably go back to test this 47.50 level, spend some time, and then make a decision. But for now, we're still inside that Asia range, and there's not really much we can do about it. But gold is the only one that made an attempt of closing the gap, and you could say that it almost closed it, right? Almost. All of the other products are still sitting, my products are sitting with those gaps, like painstakingly staring at you from the charts. All right. Is there anything else I can say? Let's see where they reversed it. So there was a weaker GEX level at 46.50. And that's, I would say that this whole smash through it was just a low liquidity swipe, right? It's a sweep, sweep, however you want to call it. So I'm gonna say that they're probably interested at 46.50 to the downside because they failed to sustain the movement below it, and then created this Tokyo low at 46.25. So I would be maybe interested in becoming a buyer somewhere here if I'm looking for buys. Alternatively, maybe a small, like this VWAP is way too close when I see where the Asia range is located. So that's why I'm not too interested in it. And then, as always, the opposite side of the picture would be if we head all the way up over Tokyo High and over all of these like pops above it, and then maybe go back towards 4800, which is where the next area is located. And that was a big area of interest last week. It literally oscillated around 4800 on most days before it finally decided to make a move. But that will be let's call that GEX1 because it's a pretty strong level even today. So yeah. Do you think it's wise to hold gold from 47.30 into the New York session? I would want a bigger, much bigger move and an excursion from the Asia range in order to hold it. I don't think you've got enough space. There is this thing that happens in between the open of COMEX and then whatever London did. So right now London is trying to go higher, but then as soon as COMEX opens you have a ton more volatility, and you have to look at the ranges as well, right? So if you had a whole, let's say at least half of the average session range in profit, I would argue that you have just about enough space to hold that position and to go, okay, well, you know, let me see what happens. And there's always some kind of a pullback during the first half an hour of COMEX. We like to call that head fakes, but they happen nearly every single day. So the first 30 minutes of COMEX and NYMEX, by the way, Crude Oil does the same thing, they tend to be the wrong-sided moves that are just a result of everybody wanting to put their positions as soon as the market officially starts the regular trading hours. Even though we don't have the pits anymore, they still hold on to the old pit hours when it comes to volume, and you can see that happening every day. So I personally, unless I have on gold, that would be like at least 350 ticks in profit, I would basically just take whatever I've got and then find another trade after the NY cut, which is the Forex option expiry. Happens every day, 9 a.m. Central. And why does that matter for gold? Because gold is pitted against the USD, so against the dollar. So therefore, if you have some sort of an option expiry in something like Aussie dollar, Canadian dollar, it all kind of comes back to basically be anchored to whatever the dollar might be doing, right? So if you have a huge option expiry, that brings a lot of volume, so you can get volatility, but frequently you also see reversals into the euro close as well. So unless I'm heavily in profit, like the only way I would say that this would have been safe is, let's say that somehow you found a setup somewhere sub this 4700 and you're holding it from ballpark, let's say 4680. And now we're all the way up here. Well, then I would say yes, you have time to figure out what to do when COMEX opens. But just by the fact that they're struggling around this Tokyo high, they have not gone into a breakout trade, I would be a little bit on the defensive side to just get the money that I already have and then see what they do and wait for that pullback and sort of a fake out smash outside of the initial balance after COMEX is done, and then maybe find another trade. But yeah, if you have a look at how all of the previous days were behaving, so let's go to, yeah, here's Asia, went up, then you have the London going down, and then still no breakout, right? And then into this COMEX is so, like, look at this candle. This is the volatility that I'm talking about. It's so massive, right? 433 ticks in the space of half an hour. And then they smack into VWAP, not able to take it in. And then you get the post-NY cut, and that's when you get the proper move. So this is why I'm not that happy doing swing trades until I see what is it that they want to do. And this was heavily driven by news as well, not necessarily a technical move. But that sort of reversal between either Asia and London or just London into COMEX, that tends to happen a lot. So Asia takes it down, Asia takes it up, COMEX takes it down. So let's go back. How many times does this happen? Asia takes it up, COMEX takes it down. Asia takes it down, London takes it up, pre-market chops, and then COMEX kicks in. What does it do? Takes it up. So you see how they're chasing each other, right? This one is down, this one is up, this one is up, this one is down. So that's why swing trades for me have to be done in kind of, if I'm doing any sort of a swing, even in options, I usually try to position myself towards the end of the day. And then I have Asia potentially pushing it in whichever direction to give me the space to hold the swing, if that makes sense. But swings that are done sort of during London, I always found them super tricky and not particularly successful, precisely because of the way the price action behaves. So yeah, so we've just gone, maybe 4 days back, and you still see that dynamics between Asia versus COMEX. So Asia takes it one way, COMEX reverses. Asia takes it one way, COMEX reverses. So just be careful when you're looking at things. Very, very few days exist where Asia takes it one way and London takes it higher and then COMEX takes it even higher. That happens like 8% of the time on gold. Not very frequent. You always have this ebb and flow between them. Lido says, people tell me to always use volume profile for gold. I mean, it's useful. It is useful. Raymundo says, my eval lasted 8 hours last night. Yeah, take it easy, guys. Yeah, that's exactly what we're talking about. If you lose, you need to lose slower and less, right? If you must try something, try it on 1 or 2 micros like I'm doing here. Wide stops, and then that kind of gives you an idea. Because when you're in a trade, your perception changes, and suddenly you're like, oh, what are they trying to do here? And then just by getting the information of either a small win or a small loss, you kind of get the idea of what survived and what didn't survive. So you effectively pay a little bit of money, just a little bit of money, not the entire eval, for some information. And then if it's a win, you can take that small buffer into the more higher probability parts of the day to keep building. So, for me, it's very important to start my day super slow, precisely because I know that this time of day is like a coin flip. It's like 50-50. So if I manage to find a little scalp, at least I have the marker where my trade actually was, how the price behaved around it, and whether it was ultimately a successful trade or not, however small, right? If it was a scratch, I would argue that doesn't provide you much information. But, for me, I don't mind paying, a little bit of cash to see what is it that they're trying to do. Right, something interesting is happening in crude oil as I'm talking, because I'm seeing it in the corner of my eye. We're actually arriving into the IB high area and that 103.50. So we're gonna see. Oh, this looks newsy. This looks newsy. Let me check financial juice. Newsy candles all over the place. Begins. Need to reload my financial juice. Let's see. What's the time? It's midday. Okay. I mean, I'm not seeing anything yet, but let's wait. Oh, did that tick me out? It ticked me out, guys. Hey. See, this is where I use the 55 tick stop, which is normally enough, but it was not enough. And look, my stop was at 87.60. It tagged me. That was basically me not putting stops where they should be. So let's try that again. That looks better. Alright, so retest to the Tokyo high. Crude oil retested initial balance high. let's see if this way of looking at what they want to do here with a better stop loss placement. Still not seeing any red news on financial juice. But yeah, so only 140 tick smack on the face. Not much, right? So it's just like, oh, a little bit of information there. But I will say that my stop could have been at a better location. So just kind of talking through the thought patterns. At the same time, gold is ticking into like the IB low and immediately shying away from it. But I would be a little bit bullish on crude oil. Von der Leyen is saying there can be no stability in the Middle East while Lebanon is in flames. I mean, that would be pretty bullish for crude oil. Maybe we can... let's wait for the 15-minute time frame to finish. If crude oil is still hanging above the initial balance high, I might do just one micro to test whether that would actually work. Just gonna let the Cavalier out. He's been a nightmare recently. Back in 2 seconds. Alright, we back. Let me just adjust my markers over here. Now, crude oil doesn't do very well with just like 5-minute time frames. They are very noisy on crude oil, especially in this environment. So I typically, if I want some sort of an entry earlier, I will use a 15-minute time frame finish. So I will not be using 5 minutes or 2 minutes or front running things, because in this environment you have plenty of movement, so you don't need to be like, you know, super zoomed in. Alright, so we got all three now, just to look at that correlation and how it's developing. And let's move to the 15-minute time frame on all three. Copper is the slowest out of them and the lowest amount of volatility, even though it still provides pretty good ranges for me. Right, what is this? Israel's Prime Minister Netanyahu. Israel supports Trump's blockade on Iran. Of course they do. So let's see how the market digests that. Saltbuster, good morning. Goldman Sachs earnings in 30 minutes possible or just hour end. So I would probably wait until the bottom of the hour at the very least. Although Goldman Sachs earnings is something that will probably impact equities more, gold and especially crude oil, I don't know how interested they will be. Because they've got bigger issues, right? Crude oil is not really that sensitive to most financial sort of stuff about the banks and the increases. Crude oil cares about the inventories. It cares about, like, it doesn't even care immediately for the Fed rate change. There's like a little bit of jumpiness, but nothing like you see in equities. So really back in the day when I worked for sort of brick and mortar prop firms, if you were trading crude oil, you didn't have to be flat for PPI, CPI, jobless claims, NFP, if you were trading crude oil. But you did have to be flat for the inventories report and any kind of OPEC plus talks and stuff. But when it comes to, you know, earnings, even things like, NVIDIA earnings, Crude oil just really couldn't care less. They're just like, whatever. And they just carry on whatever they're doing without any sort of implied volatility kicking up on the basis of some tech firm doing well. And so one of my little insights, let's call them, because copper is so much slower than the other two, you will find that gold and crude oil kind of jump around. So sometimes it's a little bit difficult to kind of go, oh, is this the right move? Are they really kind of smashing it down now? Or is this just a bit of wiggling before they smack it higher again? So what I do, I watch the reactions of copper, which is so much slower and a lot less psychotic. And then I see how copper ends up on a 15 and a 30-minute time frame. So if we get, let's say, crude oil ending up as a doji and trying to crawl back out of the initial balance because it's trying to fall into it, but it's falling into all of these levels here where we bounced earlier. And I just moved that, did not mean to do that. Let me just take it back, take it to the bridge, take it past the bridge, take it to the post office. That's a Bill Bailey joke, by the way, if you know, the UK comedian who's also a musician. But yeah, so let's say that we get, all this mess and whatever and testing initial balance and whatever, but ultimately they end up either as a doji or yet another sort of pin bar. But copper is not responding by holding above the Tokyo high. Instead, it goes into a reversal. That will be my signal that whatever failed auction we might have seen in either gold or crude oil is very likely a fake out for now, right? So this is why I stick to higher time frames, higher meaning 15 minutes and 30 minutes, for any sort of entry signals into crude oil and gold specifically. Because it just provides you with less noise. Alright, the name's Damo says long gold from 47.35.2, stop loss and profit, seeing if we can ride this to a few hours into gap fill. But gap fill already happened, dude, on gold. So here's the gap, here's the top, so what's that, 47.63? And this was 47.65 low. I mean, maybe we can stretch the gap to be to the close, which would I suppose be all the way up to 47.77. But on gold, these edges of the gaps, the highs and lows, they tend to be the ones. So if you're doing a long that's new on the basis of this, to me, the way I'm looking at this, the way I approach these sort of setups is that I'm trading against the pop into the gap, completion of the gap, and then a reversal. So let's just go through some higher time frames here. So here's 30 minutes, not really providing much. 1 hour, looking a bit consolidated here. 4 hours. This is gonna load in a while, takes a bit. What do we have on a 4-hour chart? We have a bearish reversal. I don't know, if I'm gonna run a long, I want to be away from the 4-hour reversal candles. So it's not impossible, right? But why am I saying that? Because we do establish ranges at this time of day. So if we go with your trading idea that this is a range, yeah, you have space up until like 47.60. But I just don't like it when I see a reversal on a 4-hour time frame and struggling around initial balance low. I just don't like to go against that personally. Unless we actually solidly accept the initial balance and then that represents a failed auction. But usually I don't want to see this if I'm getting involved in longs. But hey, it's your trade, so I'm not saying that it won't work because, you know, anything can happen for sure. It's just for me personally, I would be considering that as a weaker long. And also the fact that we have near equal lows here at 47.30, those tend to be rife for market makers to just go But your stop is already in profit, so you've got nothing to lose, right? Not if you're using settlement gap. So settlement gap on gold is again up at 47.71. So remember, COMEX does not end with the electronic close. COMEX settlement is 12:30 p.m. Central, 1:30 p.m. Eastern, and 6:30 p.m. UK. And that falls literally again around 47.71. I'm just saying be careful, because I've seen this before and it's not usually the highest probability setup. So, and also in light of crude oil, some bullish news for crude oil. More news, Netanyahu. Vance said the main issue is removing enriched uranium. Okay, good. So for now, gold is rejecting the initial balance low. Crude oil is attempting to crawl outside of the initial balance. But we still have 3 minutes until 15 minutes ends. And then another 15 minutes before we get a new 30-minute TPO. So for now, this looks like a test of initial balance and a prompt reversal. Is it going to sustain? Now is the next question, right? I'm just checking some things. Checking whether these GEX levels are moving or no. So well, I'm seeing some smaller development here. So there's a little bit of a pop in interest at 47.45. And 47.40, and my algorithm is saying that that's more like a chop zone, but there is a bit of an increased interest in those. Well, how much is that? That's roughly about $5 range. So yeah. Troopers is saying 47.71 last traded price from Friday. Settlement is 47.84.4. Yeah, but you also have a huge gap as a result of news. And we've already traversed a fair amount. So, you know, just be careful with big weekend gaps. That's all I'm going to say. Because usually when they pop into it and they try to fill it completely, but then they fail, that gives you information. I'm not arguing, I'm just saying that I've seen this happen before and they just basically pop into it, try to fill it, fail, and then all hell breaks loose to the downside. Gold kind of looks like head and shoulders pattern. I don't use those. To me, those are like ink stains. Everybody sees what they want to see. And then they go bats, butterflies, dragons. It might work for sure, but to me, how do you execute a trade with a stop loss without being wishy-washy about it? Oh, it's a head and shoulders. Great. Where's your entry? Well, on a break of a trend line. Cool. Let me know how that works out for you on gold. That may work for equities that are a lot more trending, generally have a personality of a trending market. Gold has been struggling ever since we smashed through 5,000. And to me, every time they try to take it higher, even on that weekly time frame, you see all those wicks they keep happening, the selling wicks. That's not what gold looks like when it's in a strong trend. So I'm just saying, be careful, right? Do whatever you want. Like, all trades are valid, but this is not for me, okay? The head is the stop. Okay, again, I'm telling you, head and shoulders on commodities are not as good nor high probability as they are. Maybe if you're looking at the daily chart, because then it's like a supply and demand on large time frames. But intraday, if you're using that, just be careful, because gold is incredibly spiky. Incredibly spiky. Everything, Mr. G, everything is correlating. This is called risk on, risk off. So today we have a potential for risk off because crude oil is up, gold is down, equities are down. That's risk off these days. Troop says I typically use settlement gaps more in indices than commodities, since commodities settle very early into the day. Yeah, that's perfect. They settle way earlier, right? So you have gold settling, what, 2.5 hours, and then it keeps trading. So it's like, okay, great. I don't know why they still do that. Honestly, it's so outdated, dinosaur-y. I don't know. They should go with the times, right? They should go, hey, okay, times have changed. We now have markets that trade throughout the evening. So what is this settlement gap, or what is this settlement literally like halfway through the afternoon session? It's like, oh yeah, well, we're closed now. But actually we're not closed because we're still trading. It's just we kind of settled for the day. It's like, okay. Troop said, surprise that Comex has an updated settlement. Like, yeah, I know, right? I'm of the same opinion, man. Alright, so crude oil ending up as a doji, pin bar. Now what can sometimes happen with pin bars on crude oil is that they tend to be like a little bit fakey outy. They do bring reversals eventually, but not before they go down, swipe the nearest low, and then decide whether they're going to actually wick it back up. After that, you typically see a sweep post the tests of the pin bar on the book map, and then you see a very huge reversal. So effectively being trap sellers, if you want to believe those concepts, somebody who was trying to short straight into a pin bar and then gets run over. So yeah. Nomar is talking to me in Spanish, I think. I have no idea what you say, but I think it's positive. I'm seeing with a lot of profit, thank you, from what I know in Spanish. But so I'm going to assume it's positive, right? So if it's with a lot of profit, thank you. So that's all I can understand. So whatever that means, welcome. And yes, I could go to Google Translate, but I'm kind of doing a stream now rather than me sitting here and doing riveting TV of D using Google Translate. And I do speak a couple of languages, I do, but they're not, like one of them is, I used to be able to speak Italian better. Nowadays, I can kind of understand it, but I lack vocabulary. And then German is similar, I can understand a lot of it. All right, Sodbuster, thank you so much. Happy to have started the week with profit. That was the translation. So thank you guys. Thank you. And thank you, troops. Yeah. In America, everyone's Spanish. Funny enough, every time I'm either like in Orlando or even in LA, actually, because every time I'm over there, because obviously I look Mediterranean and I'm a little bit ambiguous as to what I actually am. All of the Spanish think that I'm one of theirs. So they come to me, they jabber at me in Spanish, and I'm like, I'm sorry, but I can't understand you. And then one lady said to me, "You should learn your language." And I was like, "But it's not my language though, because I'm like Greek, Italian, and Serbian." She was like, "What do you mean it's not your language?" And I was like, "It's not my language." I respect the language. I wish I could speak more of it, but at this point I might be a little bit too old to be starting with new languages. So yeah. Do I trade Asia session? Yes, occasionally. Right now, Asia session, because we've gone into the daylight savings nonsense, Tokyo actually begins at 1 a.m. in the morning for me. I'm Granny D, so I'm already in bed by like 9 p.m., 10. And unfortunately, right now, like I can just about make it if Tokyo opens at 12. So then I can kind of stay awake until 1. Or sleep a little bit, then get up and then, do a position and then leave it until 6 in the morning. But unfortunately, it's too late. So right now I would have to wait until the open and then wait until sort of like 2:30, 3 a.m. Then do the position and then try to get up and do stuff in the morning. I'm too old to be doing that. So for this time of the year, I don't think I'm going to have a lot of Asia trading. The only thing I might do, because I do wake up pretty early, I might be sometimes doing the reversal into the Shanghai last hour, which starts at 7 a.m. now. So that's a good time for me. But unfortunately, recently my oldest doggo, Lenny the Cavalier, he hasn't been, like he's fine, he's kind of stable, but something's going on with his tummy. So he won't really eat. Like the bloods are fine, everything's fine. But he has had a few nights where he's like restless and then he won't settle and he won't eat. So I've been a little bit tired trying to deal with all that with him. So me having sleepless nights and trying to trade, usually not the best combo. Especially not in my age. So Sodbuster says, "I'm white as can be, but born in NM." That's what? North NM. What's NM? I'm terrible with abbreviations. New Mexico, right. Of course. New Mexico. Not fluent, but can get by. Yeah. I mean, look, if you live over there, like I know that we went over there quite a bit. If I was to live there, I would probably make a massive effort to actually get Spanish a little bit better. Because it is one of the languages that everybody speaks. So it's like, it makes sense, right? Mo says, "This is going to make me sound like such an amateur." No. But is your stop market buy order times 2 your stop loss on copper? Also buys 2 coppers, essentially a reverse position. So yeah, in the futures, the way it still works, when you sell 2 contracts, your stop loss is the opposite of that. So it becomes a buy stop. So it's still a market order, but it's kind of sitting there waiting until the price to touch it before it executes. And then it cancels each other out, right? So that's why they're called OCOs. One cancels other. Or as one of my friends, he was Norwegian, and how did he put it? OCO, he said, order cancels another. And I was like, no, mate. One cancels other. OCO. And he's like, yeah, you know what I meant. And I'm like, yeah, I know what you meant. But yeah, so that's why they're called OCOs. One cancels other. It means that this one is the opposite of that one. So therefore, when you're in a short, let's say 1, and you want to get out of that short, you need a buy stop higher than the price. Or lower if you're like trading a stop. But it's the same thing. It's a market order waiting for a price. Almost like market if touched, so to speak. But Topstep doesn't have market if touched. Saltbuster says, New Mexico, no running water. Alright, doggy school has arrived to pick up our crowd, 3 of them. So you might hear a bit of screaming. How do I get my dome to see multiple ask size and multiple different bid prices? Ian, that's a level 2 data. It is a paid for service, but it's only passed through from the CME in Topstep. You can find it in add-ons in your new dashboard, and you can then sign up for it in and around the 1st of the month. So don't sign up now, because they always take the payment on the 1st of the month. So if you sign up now, you're just going to get like barely 15 days worth of data, and then they're going to charge you again. Okay. I'm going to mute myself for 3 seconds while the puppies are screaming to go to doggy school, because I don't want anybody to be disrupted. So what happens is that dogs go, because I've got 8 dogs. Now, at the moment, only 7 of them are going. But we have 3 of them going on a Monday, in and around this time, which is what you're hearing now. And then another 4 going on a Wednesday morning. So on Wednesdays, whenever I'm doing the stream, those 4 come back. And then those who have stayed behind, they start getting excited because their pals are back. But the Monday crowd, they get picked up in and around midday, like literally now, you've heard that. And they love going. They love going. They just love their doggy pals, and they get so excited to go. It's very funny to see. Iran ambassadors to India. Iran has oil and is ready to sell to any country that wants it. Brilliant. So they're like, yeah. Do you want our oil? No, they're still going crazy. So more muting, sorry. So Mo, to clarify, you say for this specific order, you don't set a stop loss, just a stop market buy. Okay, so stop loss is just a term that people came up with over the years. It's like you stop the loss, right? But what it is underneath, it's effectively a buy stop against my sell order, right? So you have a market sell, and then you have a buy stop that is sitting higher up now, right? So if you decide to trail something, I don't personally trail my positions. If I feel that the price is not doing what I want it to, I will take it off early, but I won't trade it to break even because I still want to get a few ticks out of it. But yeah, so it's always the opposite order. Stop loss was just a term, but it doesn't reflect what's actually going on underneath. Whereas a lot of the futures platforms, they will tell you what it is that the order actually is doing. And for short positions, stop losses are stop buys, so stop market buys. So when the price gets there, if it gets there, it will stop you out by canceling out the short position. But the stop loss as a term is just something that they came up with over the years. So you stop the loss. And I suppose you can also say stop gain for a trail stop. Why? Because you're in profit. So you're stopping gain, right? It's the same thing. But it's going to be the same order. So it's always going to be some sort of a stop buy or stop sell against the core position. In this case, because I'm short, it's a stop buy. Buy stop. If I was long, I would have a sell stop. Does that make sense? Andrea says, hello, Deeyana in chat. Happy Easter to those celebrating. So if you didn't know, it was Orthodox Easter yesterday. We're always a week late. Because old calendar, innit? But yeah, So, thank you. Happy Easter. Victor says, I can't lie, I love the volatility the headlines bring. I'm pretty cool with it as well, I've got to say. I don't mind it. I really don't. I like these markets. I know that many people are like, oh, price action is shit. But I think the targets, if you have any, they're reached much faster. It still does what it's supposed to do, but for a lot shorter period of time. Right, so morning star on a 15-minute chart on crude oil exiting the initial balance and maybe pushing. So could probably get away with an 85 tick stop on crude oil. So let's try that. But I'm only going to do one because we're starting slow. Let's try this. So now this is effectively the same sided position as if I was short gold and I'm also short copper, right? Same sided, but they're just different volatilities. And that's why I'm kind of partialing things. So crude oil is only 1 because it's bigger, requires a bigger stop. Copper is 2 because it's slower. So it requires a lot less. Even though technically the tick value is a little bit bigger, but yeah. Mo says, got a D, thanks. It's just when I use Topstep, I would set my stop loss, which limits my loss, and also stop market buy, which also buys an additional position that puts me in a long for breakouts. Yeah, you can still do that. So, I'm not going to do it on copper, but let's do it on crude oil. So if I was to enter a position to the short side that also stops me out, then this stop market sell would need another friend, yeah? So you could do something like this. I don't like doing that, but, you know, if that's your strategy for breakouts, that's how you would do it. So you would basically put an additional stop sell at or just past the original stop, and then you would have two. I don't want to jam them together now because I want to have flexibility of taking it off like this. Do I trade equities? I mainly ever see you trade metals and energies. Well, Kyron, I'm a metals and energies trader. I do trade DAX in the morning. But I'm not really that keen on US equities when it comes to intraday trading. I do have some long-term portfolio positions in about 3 or 4 different stocks. One of them you wouldn't know what it is, but the second one is Palantir that I've held since $9 and I'm never selling. But when it comes to intraday, I may do DAX trades in the morning, but I think on this XFA, I might have done one M&Q like 3 weeks ago. It was a good one. I just don't like US equities during US hours. That's just how it is. But yeah, so, you know, I think you have so many equities traders out there that, you know, somebody offering alternative markets like copper, crude oil, gold, silver. I think that's lacking in the industry because commodities are amazing. You know, commodities, especially in these sort of environments when everything is happening. And the reason why I know what's happening now with correlations is because I've traded commodities for so long and I know how they behave. Unfortunately, they're a lot more tricky than equities. So a lot of the equities traders that are seeing these markets for the first time, and just to make it perfectly clear, I'm seeing everything correlating to crude oil movement. So if you haven't traded crude oil, the price action in equities that is reflecting mirror-like movements of crude oil, it's going to be hell for you. Hell. JP says, I'm in gold shorts from 47.45. 4 thoughts. I would call that initial balance low touch and continuation. It looks good for now. Now just watch what happens in and around these near equal lows around 47.30. You also have VWAP underneath. What are you targeting? Karen says, I like trading metals. I feel like I always lose trying to trade equities or win and give it back. So don't trade equities. Nobody's forcing you with a stake. I don't like trading equities. I'm absolutely fine. Do you know how many people, when NQ was moving nicely and everybody was like, D, you need to trade NQ, and I was like, oh, hell no. That ain't happening. Because I've traded it before. It's not like, oh, I've never traded NQ. It's like, I've traded it. That's why I know how insane it became after COVID. And specifically after 2022, when the liquidity never went away. So we had craziness during COVID, but the price action was still reasonable. JP says targeting those lows that you just mentioned. Excellent. I like it. I like it. That would have been more my choice of gold trade if I had to, like, sort of gun to the head. What are you doing on gold, D? I would have done a short. So, but you could say that this copper trade that I'm in is actually the mirror image of whatever's happening in gold, only with slightly different volatility. And also, by the same token, the crude oil long is also a mirror image of whatever gold is doing. So just, slightly different movements and volatilities. So yeah. But yeah, JP, I like it. I like the trade. Trading NQ is like negotiating with a crackhead. I would beg to agree with that, Pat. Gold and copper are scarier than NQ. You see, I disagree with that. Because gold, to me, respects levels. It respects levels. NQ doesn't. NQ goes through, even in like lower volatility environments, you never know where the hell it's going to stop. And then, it does these like fake out sustain moves with a lot of wicks all over the place, a lot of wicks. Like, let's take VWAP, for example. NQ will close below VWAP, for example. Then it will also make another attempt at a push in the same direction and then turn around and smack you across the face like you've never seen it. Whereas copper, gold, even crude oil, they get to VWAP. Okay, crude oil is a bit crazy these days. So I will, and VWAP has never really been a massive level in crude oil. It's a little bit trickier than it is in, for example, copper. But copper and VWAP, it's like it touches it, maybe overshoots it by about 10-15 ticks and orderly pulls back. No drama, no this like high velocity nonsense. It just does it in such an orderly fashion that it makes it super easy to decide what you want to do. And copper, if we could, is probably the only product where I would be okay trading the full contract right now in this sort of environment. The rest of it, definitely micros, but yeah. So, Call One says, yeah, gold respects the structure. NQ does higher high than lower low than higher high. Exactly. Psychotic. Yeah. What levels do I use for gold? Daily. So I look at the weekly, daily. If you've been here from the start, you will know that we start on weekly, look at the daily, then we drop down to a 30-minute time frame. So I use the value area from previous sessions individually. So where are we for London? Where are we for even Asia? Sometimes if I'm going to trade Asia. But mainly Asia range, right? So where was the price discovery during Asia? How does that relate to the previous day's value for COMEX and value for London? And then from there on out, I literally just use GEX levels and statistical averages as and when they arrive. So that's just my style. Blue Shark says, after getting smacked in the face a few times, you get to learn the pattern. Yeah, some people don't. That's an interesting... Interesting tidbit. VWAP Zach says, personally, I like using the inverse to trade currencies these days. Yeah, that's a good approach. The names, Damo says, I closed my long after we rejected 47.50, entered short after the 30-minute evening star on the rejection to IB. Brilliant. Beautiful trading. Yeah, beautiful. That's great. All right, so gold is continuing. Now, the correlation between GC and copper tends to get a little bit messed up. All right, 47.30 is taken out. Let's see if they whip it back or they smack into VWAP. So there's a couple of options here. This is either the pre-market positioning, in which case you might see a continuation of this, but sometimes they just stop at VWAP, slice through it a bit, but ultimately pull back. If my copper trade is going to do anything, I'm guessing that I'm going to have to wait until COMEX starts trading because there's more volume back then. Lido says, how come you know likely volume profile? I don't like it for intraday. I like TPO product. Okay. Did you see that? What is that? Limited studies. That's odd. So for intraday movement, I don't think that this provides enough information. Okay? TPO profile gives me a more kind of deeper resolution into the structure of the day. You could argue that volume profile fixed range does something similar, but I'm just going to show you the difference, right? Let's use gold. So here is gold. It looks on the volume profile like a pretty evenly distributed day, right? With developing value sort of sitting quite nicely in this whole congestion structure. Would you be able to tell the gold, let me just adjust a few things, and I will apologize for the white charts because I know that many of you call me a psychopath for the white charts, so thank you for that. And I do have some other markers here, but would you be able to tell that we actually have a single-sided extension that is actually pretty skewed to the downside at the moment? Why? Because you have initial balance as an additional reference that you don't have in volume profile. You just have a jammed up volume value, which is something I have here as well, right? But to me, it's not the same. To me, this is much cleaner because I have the initial balance. I have a whole bunch of stuff to fall back on. Additional reference levels like initial balance high, initial balance low. To me, intraday volume profile doesn't have all those little bits and pieces, right? So because of that, I prefer the market profile, TPOs. So yeah. Yes, Lido, I think it was you who called me a person with challenging mental states. Or I don't know, somebody, it wasn't just one person, a lot of people when they see white charts, they're like, ah, my eyes. And I'm like, come on, I'm an old person. Douglas is asking me, Dee, did you put in feedback with Topstep X to get TPO? Not only did I put feedback, me, Hogue, everyone, I've begged MP for it over the last nearly 3 years. And so far, you know how that went. So this is why I say, I know that some of us are more visible here, but those of us who are just on-air people, we really do not have much power into what goes on technically. So yeah. Right, so gold is smashing down. Crude oil and copper are so far being much slower. So I'm going to stay on a 30-minute time frame. And I'm going to wait for COMEX and NYMEX, it seems. 49 to 5,000 FVG first. I don't know, mate. I don't know. Like, we've already had a single print test through this gap that we've seen. Alright, is this news? Are we newsy? Are we newsy? I don't know. Don't see anything yet. Douglas also said, good. Me also, what is going on? Is it that much of a backlog? Again, I can't answer that because whilst I have my own software development company, that does not operate as a part of Topstep. It's my company. So if they wanted us to, you know, we would gladly take stuff. Oh, what's happening here? Nothing, just technical moves, it seems. What's the time? Okay. TPO would be a blast. Sorry about my voice. TPO would be a blast. They always use it. Lemon says, yeah. I would love to have TPOs in Topstep X. Alright. Okay, so it looks like we're going to have to wait for some regular trading hours to kick in for crude oil and copper to actually make a move. Hypotheses are still there. Crude oil is still battling around the initial bounce high. Just underneath VWAP, but VWAP is so flat that it's not really providing much info. And copper is just sitting there like a statue. But again, hypothesis is still there, so there's nothing else for me to do. But wait, this is where patience can get rewarded. I have to mute myself because Astrid is going insane. Alright, gold smacking into VWAP and trying to bounce away from it. The question now is, will it be successful? Or are we in for a bigger drop? Out of all of the products, I said it before, gold is the only one that filled the gap to quite a big degree. So, you know, if this is a true reversal, let's go through higher time frames here. Drop base drop on a 1 hour chart. Yeah, so that 4 hour bearish engulfing, if you want to call it, is now showing up as a continuation. But again, we have another 2 hours before that is done and dusted and printed on the chart. So, yeah. And Douglas is also continuing. Open it up for third-party indicators and custom indicators. Need the main and MP together. So those feedbacks, too many good ones in it. Dude, you're talking to the wrong person there. So I have zero power over how things operate on the tech side. Okay, zero power. Like, I promise you, I'm not the person for that. We all tried. We tried it. You know, we all wanted TPOs. I wanted DAX. I wanted Eurex. Didn't get any of it. So, you know, to be fair, they did have to tackle the stability of the platform first, rather than messing with a whole bunch of stuff. And then also the third-party indicators, from what I understand, there is a copyright thing with PineScript that is owned by TradingView. It's not owned by other people, right? So you wouldn't necessarily be able to just open it up to like third-party indicators willy-nilly because of that. Douglas says, beat the drum with me. Listen, dude, I've done that for 2 years, and I think MP has nightmares from me banging on about Eurex to him when we were quite frequently on fast markets together, because 9 times out of 10 times of me being there, it would be like, when Eurex? MP, when Eurex? I think he was probably waking up at night and going, D, you know Eurex. D. So yeah. And one of the reasons why we changed the show to a new slot is because the old slot was supposed to be DAX trading, and then it never happened. So it is what it is, guys. I mean, I'm happy with my metals and energies, especially now that energies are moving. So that is absolutely beautiful. Beautiful. Not happy about the reason why they're moving, obviously because it's war. But I'm happy to have, reasonable amounts of volatility kicking about. All right, crude oil is trying to move. We have about 9 minutes to hang here together before holding space for for the daytime show with Jay. Don't know who's on today. Probably Jay Hogue. Is Ray on Mondays? Let's have a look. But yeah, for me, nothing more to do than just wait for these markets to move in my favor. Patience for me is not a problem. I am somebody who can sit on trades, this is why I joke, until the cows come home. I will wait for the move, and sometimes I even wait for the move for like 2-3 hours, and then it comes. If it doesn't come after 2 hours, I would be like, probably time to exit. But I'm generally not, unless like news comes out or something, I'm generally not grasshoppery. So if news comes out and that pushes in my direction, I'm willing to give it the benefit of the doubt. But if it starts to reverse against me immediately after I was in profit for 100 ticks, that's when I will exit. Or even 30 ticks, 30 ticks, and then some news comes out and I can see that bounce and velocity starting to pick up. That's when I'll be like, ooh, that's not good. Let me just grab whatever is there and then reevaluate. But if no such tape bombs exists, I'm perfectly able to sit on trades for a long time. Alex is asking, is there something wrong with taking orders on Topstep currently? No. What are you trying to trade? Because there is a margin requirement. I don't know how many of you are aware of this, but the brokers in general have hiked up the margins like 100%, 150%. So this is the reason why some of you, if you're in an XFA, or even if you're in a combine, I don't know whether margins still apply. I'm not sure, don't quote me on that, because I haven't done a combine now for a while since I've been in this XFA. And if they've hiked up the margin so much, you will not be able to trade it unless you have an actual buffer of several thousand at least in there, even for like 1 or 2 microns. So what are you trying to trade there, Alex? But there's no problems. You can see I executed this crude oil trade during the stream, and then I had one on copper earlier, and then I entered another same trade idea again. So why are the stocks even up overnight? Because that was the reaction to the news. We had a gap down, and then they filled the gap. Technical, right? Doesn't mean they're going to stay up. That's a whole different ball game. But for now, we're seeing a technical move of stocks going down too quickly, and them just going, hey, actually, we can't make money here. We need to bring it back up. So there's always that, I call it the Tom and Jerry chase, showing my age. But that is the reason, because they can no longer find interest and volume at those levels. So therefore, the dealers have to hedge against that. So you can assume that there may be short puts underneath. Like, let's have a look at an equity on a 30-minute time frame. This is where people don't understand how dealers operate, right? So let's assume this. Let's have a look at ES. Where do they bounce? 67, 68, roughly, right? Perfect. Let me have a look at where the nearest option big level is. I can't see anything there because I'm blind. All right, so let's have a look where they bounced. Just updating. So they bounced it. Around the biggest level there, 67.75. Okay? So let's now assume that 67.75 is where the dealers are short puts. So if the price action goes below it, they don't want it falling further down, okay? If it does, and they're caught red-handed, they have to sell more, but only if the price proves that there's like velocity and interest below it. Since they probed underneath it, failed to find business below that level, Asia dealers then decided it was time to hedge against that. Ergo, creating a mean reverting move all the way back through the big area. But now they're losing interest, right? So now they're like, oh, actually, it's come up quite far. So the level that I have as an anchor in ES is actually 68.25. So that is visually ballpark here, right? What did they do? They tried to wick above it, failed to find interest. So now they're potentially overhedged. So now they have to release some positions, and that causes the mean reversion to come back down. So this is how the dealers operate. That's all they do in a day. So their task, their main objective is not to make money from directional moves, even though they cause directional moves. It is to remain what's known as a delta neutral state. So it's a market neutral position, and they use a combination of options and outright futures transactions to achieve that throughout the day. That's all that they're doing, right? Alex says, I'm trading MES, keeps closing me out automatically when I enter. What does it say in the orders? So if you go components, go to orders, see what it says there. And if it says rejected margin not enough, you know what it is. If it says something else, apart from margin or something, you may need to reach out to the support. I'm not support. I wish I was, I'm not. Well, actually, I don't wish I was, because I don't want to be support. If I don't have to. Yeah. So that's how dealers operate, right? That's why we see the moves that we see. Blue Shark says, TradeStation is a bit higher. Yeah, a lot higher. Same as Interactive Brokers, man. Yeah. Yeah, they don't back up prop. No, they don't. Vital says, hi D, is it a smart decision to skip completely uncertain time like today in the last week? Perfect holiday time. I disagree with that statement because I think as traders we should live for the higher volatility times. If you are not making money in this environment, I would argue that your skills need to be honed further. But to me, this is like kid in a candy store, personally. Sure, you may get smacked in the face every so often, but targets getting reached faster, volatility staying so high that you have plenty of space to do whatever trading you want to do. So even if you bulls it up initially, the market with the huge volatility that it has at the moment will provide several different setups throughout the day, not just one. But you need skills to recognize that. So yeah. The Afghan trader says that just took a short in NQ. Is it a good idea? Well, I mean, it's a failure of a continued gap fill. The problem you've got now, you have pre-market and you have VWAP. So I reckon with the way NQ is crazy, it might slice through VWAP, but just watch that area as a potential pain point. I could drag out the anchor points in NQ, I just don't want to. And we're coming to the end of the stream as well. So I'm going to go back to MGC to watch my products, because again, I'm not an equities trader most of the days. Okay, so crude oil is trying to still get outside of the initial balance high. VWAP still very, very flat. So I just need to sit on this and do nothing. until I have a little bit more information and MGI. That's all I have for you today. Thank you so much for spending your time with me. Sorry, I'm trying to read chat. I'm getting awfully confused today. But do I have a group where I teach? So we are preparing the VIP coaching, but I do run my own channel, Market Stalkers, which you can see on YouTube. And I have my own small community on there where we teach all of these concepts. So it depends what you're after. If you're after some free stuff, then you're going to have to wait for the VIP next season to begin. I don't know when it's beginning, don't ask me. But anyways, that is all from me today. You probably will see me on group coaching, maybe. Yes, I'm scheduled to be on group coaching. That will be 12 p.m. Central, 6 p.m. London time. Until then, just be careful, size down. Plenty of opportunity to make money on micros in this environment. And if in doubt, if you don't know what to do with all these movements, it's always good to stay out. And with that lovely rhyme, I will see you a little bit later. This was Topstep TV Metal Markets. Let's see what the day brings. Take care.